How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report that is based on data released August 28, 2018. And here's a snapshot of the institutional positions on the majors as well as the US dollar. Okay, so let's take a look at what the institutions have been doing with gold. So I've been pointing out something extremely important here in the markets. Okay, so we had price dropping on the monthly chart, and it was able to remove this monthly area of demand here. Okay, typically, not all the time, but typically when this happens, when a new area has been created because of removing an opposing area, what will typically happen is the momentum to the downside will stop, and then we'll start to see a move like that to the upside. And what will be a really good indication of this taking place is we take a look down to one time frame lower and see if the descending structure that is in place breaks. Because once the descending structure breaks on the weekly chart, that'll open up for a move to the upside. Yes, we'll have some supply here and here and here, but the descending structure will be broken. And when the descending structure is broken, price can easily break through all the areas of supply created by the institutions and allow price to rally back up. But the thing is, when does momentum decide to stop and shift back to the upside? The only way we can tell that is by looking at the lower time frame charts to see if there is a momentum shift taking place. And with gold specifically, we can see that on the daily chart there is a momentum shift taking place. So price is shifting momentum to the upside on the daily chart, not yet on the weekly, but we can see some bullishness coming in. So to help understand when this big movement to the upside is going to take place, if indeed it's going to take place, it's so crucial to understand the COT report data. Because in situations where it's unpredictable, meaning this, you could see prices dropping and not reacting to any demand here, just a monthly bullish engulf with demand located within here, but it isn't a demand zone. Okay, so we have to understand there's demand here, but it isn't a demand zone. This is just momentum running out because the institutions are no longer shorting. Okay, they've been shorting, and now they're very aggressive with their positions. Very aggressive. And if you look at their total size, you can also see that they are very aggressive. So this means they are approaching their max limit on what they can do with their positions. When they approach their max limit, they have to do one of two things: take profits on shorts, or take profits in shorts and longs, or transfer some of their long positions into short positions. Okay, what we can see over this last week is they have reduced their 222,000 position on short down to 210, and we can also see that they've reduced their long from 213 to 207. Now, I did a report on the journal, on my journal on the website, where I broke down what has typically happened every time the institutions got heavily aggressive with their shorts. And what I was able to determine is we saw a move to the upside take place. So piecing all these pieces of data together, okay, going through and sifting through all the evidence, there is a bias that we are going to see a move to the upside. Now that's important because gold and this turn here played an instrumental role in what has happened with the euro and the US dollar over the last week. So what's happening on this chart is taking control of the markets right now. And it plays a big role in what we are going to see unfold in the rest of the markets. Okay, so keep what I just said in your mind as we go through the rest of the markets. So let's take a look here. So we have oil. Some upward momentum was expected because we had some strength in the Canadian dollar. Strength because the US dollar was getting weaker, so Canadian was getting stronger, which caused this to move up. A poorly formed area of supply still holding price down. And if we take a look at the institution's positions, we can see that they slightly increased shorts, no big deal, and slightly increased longs. Not by any great number, so the percentage long remains at 86%. And the net positions increase from 538 to 550. So a little bit of an increase in their overall net positions. Well, you can see that bullishness coming in as a response to the weekly area of demand that we have mapped out. So a move to the upside was also to be expected because of that. Okay. Again, they've been taking off some of their longs, profit taking since March and April. So all throughout here, they've been taking some profits on their longs. I'm expecting eventually for price to break down. The key thing to watch here is for this weekly area of demand to be taken out, because once it's taken out, I mean, the weekly ascending structure is already broken. Price has retraced up to the supply that was responsible for breaking the ascending structure, but it's poorly formed. We can't take any trades based off of that. So the next clue is once this is taken out, it'll open up the doorway for a bigger move to the downside. Okay, let's take a look at the US dollar. Now remember what I was saying with gold. So on here we have a weekly chart, and price is in consolidation. Price is sitting within a non-2-to-1 weekly area of demand. So just based on these two pieces of information, we are expecting this to break. But that's just two pieces of evidence. We also have the fact that gold is expected to rally, and with that rally in gold, we're expecting this to drop, because that's typically how things are between gold and the US dollar. One moves up, the other one moves down. And so when we take a look at the long positions here, we can see they've pretty much been doing nothing since July. A little increase and then a decrease. And with shorts, they've been cooled off over the last few weeks. In fact, this last couple weeks, we see it drop from 13 down to 10 down to 7. And this has somewhat increased long exposure from 77% to 85%, which is a big increase. But not because they are increasing their longs. Okay? It's because they're decreasing shorts. So now I know what you're saying. Okay, if they were going to push price all the way down here, wouldn't they want to increase short positions? Well, at these stages here, if this drop was indeed to come, the reason why they're doing what they're doing here is they're more focused on reducing their long exposure than they are in increasing shorts. Because if they increase longs and they decrease shorts, the momentum is going to be to the upside. And they're not looking to do that. Or I should say, if they are increasing shorts and decreasing longs, when they decrease longs, price, so they have a long position here and they close it, it causes it to drop. If they increase shorts, it causes it to drop. So it's the reverse of what I was saying. Not long, and it's not upward pressure, it's downward pressure, excuse me. So the point I'm making is if they are closing off longs, which causes a downward pressure, and increasing shorts causes a downward pressure, they're going to have price move down prematurely. They don't want that. They want to keep prices at high amounts to close off those long positions, and then when they are at a comfortable amount of longs, then they will start to increase their shorts, and then we can see a move like this. So one part of my brain is focused on seeing that and watching for signs of that, but I'm trying to be extremely careful to not allow that thought to be the only thought in my mind, because if I do so, then I will have a bias, and the bias will be to only look for signs of price to drop. Then I might look and miss the clues of that not taking place. Bottom line, they are aggressive with their longs, but expecting them to take some profits on them, expecting this to be taken out, and expecting price to drop. Not just based on this, but also because of what we've seen with gold. Alright, let's go to the Aussie. So this one is painting a little bit of a different picture than what we're seeing taking place with gold, the dollar, and the euro. With this one, we have a tested monthly area of demand here. And I thought there was a very good chance that we would have seen some bullish pressure coming into the market, because the euro was expected to get bullish and the gold was expected to get bullish. I was under the assumption that there was a good chance that this was going to get bullish as well. But we're not seeing that. Now we know that the larger picture is that this will eventually break and price will drop. We know that to be very high odds, and we're pretty certain about that. But it's what's going to happen in the meantime before that takes place. And so it seems like the aggressiveness is playing out, even though we've had a slight decrease from 75 to 69,000 as price was consolidating here. But we can now see that the drop is taking place. Remember, this was a demand imbalance. It was not a demand zone. So just based on that, it was to be easily removed. And it looks like it's just about to take place. Bottom line is the sentiment is bearish, with 74% of overall exposure geared to the short side, and net positions well in the negative territory. Longs are cooled off and expecting a deeper penetration through here and further down. Now, how is this going to play in with the rest of the market is something that I do not know. It's interesting what's happening right now, because like I said, with what gold is setting up what gold is slowly setting up to look like, this is not following suit. So this will be a learning lesson for me, and I'll be journaling what's taking place here, and I'll be paying attention to what gold is doing and what this is doing, and trying to have this be an experience where I can learn from this. Alright, so we move on to the US CAD. That weekly area of demand is holding well, as I was mentioning last week in the video. All the currency pairs are all sitting within their respective weekly zones, and we can see that this one's holding quite well. So as price was consolidating before a drop to test the weekly area of demand for a second time, the institutions remain with their slight aggressiveness on the long positions. We can see a slight increase in shorts. The slight increase in shorts most likely was used to cause price to dip down deeper into the weekly area of demand. We can see a slight reduction in net positions from 27 in the positive to 24. Bottom line, look at this. This is very important here. Coloration of the cells neutral. That's a good sign to not be doing anything right now, because we have yet to see proof of what the US dollar is going to do. If the US dollar breaks through its weekly area of demand, right? Let's go back there. If it breaks through this weekly area of demand, there's nothing to stop price from dropping down to this area here. So when we go back to the CAD, if that weekly area of demand gets taken out, this will most likely be taken out, and we'll see a drop probably down to this already tested area of demand here. Most likely test a little bit deeper, eat the demand that's sitting lower in that demand zone, and then see a buildup of a position to the upside. That's possible. Now, I've gone through on some webinars and also on the Forex Market Outlook video that has been supplied to the full mentorship members, that based on market dynamics, this zone typically holds. So there's a possibility that the US dollar does hold its weekly area of demand, even though it's poorly formed formed. And even though there's a lot of congestion to the left of it, there's a possibility, if I was to judge it based on the market dynamics of what the charts are presenting themselves. So then we take a look at the data to see what the data supports. Well, we can see that since July, there's been profit taking on longs. Okay, they reached some highs, some supply, so profit taking on longs is to be expected. And over the last couple of weeks, 56 slowly added to 59, 58. They're holding a slightly aggressive long position. Not really taking much more profits on any long positions lately. So it's hard to gauge what's going to take place, because right now what could happen is they could start to accumulate a long position and price goes up. That's why we're watching very closely on the daily chart for that momentum shift to take place, and for those key signs to show us that the institutions are starting to fill in more demand. Because if they start to focus on filling in demand orders, their long positions from this area, it's going to become pretty evident that they're starting to accumulate a long position because they want to push price to the upside. It's do or die time, as I mentioned in the past report. This area either holds or it doesn't. That's what we're going to be watching for, because if it holds, we'll start opening up long positions to take advantage of the move to the upside, and if it doesn't, we'll wait for the drop to take place, and then we'll watch for them to start to accumulate that long position. One of the two is going to happen. We just got to sit and wait patiently for one of those two to happen, and then we'll take advantage of whatever does take place. US dollar Swiss franc, we finally got that really nice move down towards that weekly area of demand. I've been wanting to take a trade off of this demand for quite some time. And so if we take a look at the positions held by the institutions, we can see that they're still very aggressive. Okay, they were more so here. They took profits here. Price has dropped. They're still aggressive. Shorts are still cooled off. Okay, so they weren't adding short here with the US Swiss franc. So this could be a little clue, because when examining the US dollar and examining the US CAD, we've seen that they really haven't been adding any short positions. So this tells us that the banks are willing to drop price without adding short positions to profit on that move to the downside or to hedge against their long positions here. Okay, they're not concerned. But then again, they're probably not concerned, because if you take a look here, April, right here, April, May, they started increasing aggressively, and then they took profits. Since these highs, they haven't really added any of their longs. So no shorts were added up here as well. Shorts were added back in April, May. April, right here. Shorts were added on the way up here. So when it comes down here, those shorts are now in profit. So that's why they didn't need to add any shorts, because they're not losing in any long positions. Their long positions are not going into any type of drawdown. So therefore, they didn't need to add any shorts. The short positions they added over here are now in profit over here. So what we could start seeing right now is some long positions being added to, and some of those short positions even get reduced further for some profit taking. So that may lend true to what's happening on the US CAD and the dollar as well. I'll have to spend some time examining the data a little bit further to see where exactly they added those short positions, because that will change slightly what I'll be looking for in preparation for a move to the downside. Are they going to be required to add some shorts based on their positioning? Well, their situation may be similar to what's happening here. Maybe they don't need to be, and therefore we shouldn't even be looking out to see if they are going to add their short positions. So, learning lesson that we've just shared together here. So let's go on to the next one. Euro US dollar, what do we see here? So I've been mentioning that the euros, they're very aggressive with their long positions. I mean, since June, they have taken some of their longs off, but they're still very aggressive. And if you look at the positions here, 171, 178, 51% geared to the short side, but the coloration of the cells are not red. They're neutral, meaning not a good time to trade. And that makes a lot of sense because it really isn't a good time to trade. Price has reacted from an area of supply, so we were expecting a move to the downside. The forces of price are down, but momentum was just moving downwards. Momentum is slowly dying. So where does it actually shift from? There is no weekly structure here to break. So where does momentum shift from? One of the key things we look for to see if momentum is going to shift is to watch for a zone to be removed. This was the latest area of supply by the institutions. Once this gets taken out, if it does indeed get taken out, it opens up the doorway for a move to the upside. If it does indeed hold, then we'll see a move to the downside. One of the two are going to take place. Now I have a slight bias that price is going to move up. Again, because if you look at what's happening with the other markets and gold, it suggests that that is what's going to take place. Okay, let's go on to the pound. Pound falling short of hitting its weekly area of supply. And this week we can see a little bit of bearish pressure coming in because of that. Very close to the weekly area of supply. So sometimes when price falls just short of hitting the weekly area of supply, sometimes we'll see price reacting from that area. But if we take a look at the data, we can see that longs somewhat were cooled off and now slowly entering a little bit more into aggressive territory, while shorts have been aggressive over the last few weeks. But in the last week, a slight decline from 140 to 135,000. So what does that mean? Does that mean that the institutions are preparing for a bigger move to the upside? If gold does rally and the euro does rally, this move like this could definitely happen. Okay, we have to also remember that we're very close to a monthly area of demand off of a higher time frame area of demand. So bullishness is going to eventually start to be built up here. Okay, they were aggressive with shorts. That's what helped cause the price to drop. But now we're starting to see a shift from cooled off longs to aggressive longs. So this is one of those pieces of evidence that plays in very well with what we're seeing with gold and the dollar and so forth. Okay, let's take a look at the US dollar Japanese yen. Same thing with the US CAD. Its weekly area of demand is holding here. Long slightly decreasing over the last few weeks. Bottom line is the coloration of the cells here are neutral, telling us not a good time to trade. Now, when looking for evidence to see if the institutions are going to start building up a long position off of this area here to help us decide on whether or not the US dollar is going to continue to move to the upside, or if its weekly demand is going to break and price is going to drop, what I did see is that momentum has indeed shifted on the daily chart. But if you look very closely, you'll see that the new areas of demand being formed were very poorly formed, and they didn't establish a nice push up to the upside on the charts, signifying that there was a lot of demand being filled in by the institutions. So in essence, it's somewhat of a false alarm, and we have to look at it as such. Really bad formation here on the weekly. Still waiting to see what happens with the US dollar to determine what I will end up doing with this pair. So the Kiwi rallied up, hit a daily area of supply, nested within the weekly area of supply, and as it was rallying up, shorts were hardly moved and longs were slightly increased. Bottom line is short exposure drops from 72 to 71%, still overall bearish with a minus 23 net positions. We do know that bottom line price will eventually move down, but it's when is it exactly going to move down? Looking at the Aussie, this one is in line with the Aussie, where all the signs are pointing to a bigger move down. Everything is playing out like that. But we always know that markets follow each other. They're all interconnected. One does one thing, the other one does the opposite at times, or sometimes does the same thing. So it's tough to hold a short position here when so much evidence is pointing to the fact that gold is going to rally, euro is going to rally, pound is going to rally. So it's a waiting game right now. I mean, you could gamble, but I'd rather not put my money into the markets and gamble at this time. So waiting to see what does happen with here, because there's a good chance this area gets taken out and we see a bigger pullback to the upside. Even though technically the charts are not suggesting that, the chances are there simply because of what we're seeing with the other markets. Okay, so this week we got some data that's going to stir up the markets. On Tuesday we got the pound interest rate coming out. On Wednesday we got the Bank of Canada releasing the rates. And then I believe on Friday we have non-farm payrolls. So it's going to be an interesting one. Today is Monday. It's a holiday here in Canada and in the States. So things are a little bit slow in the markets, but I hope this video was helpful for you. Just be aware that we have to be patient, because this is not a time to be putting money in the markets. Let's wait for the banks to show us what they're doing, and once they show us what we're doing, then we'll be better prepared to take advantage of the moves that they're going to be making. Alright, ladies and gents, I hope you enjoyed this video. Hope you enjoy the rest of your day. And until next time, take care.